Good afternoon, everyone, and welcome to Stock Market Today. It's Allie Coram and Ed Carson here with a breakdown of the action in today's session, where we saw decent gains to cap off the week, but for the week, the major indexes suffered big weekly losses, Ed.
Yeah, it was a wild day and a wild week. I want to take a look at one stock that's doing pretty well, Albemarle, and then two stocks that sort of exemplified why there's real trouble on the tech side, Apple and Twilio.
Yes, we will get to those, but first let's take a look at the major indexes. So as mentioned, some decent gains Friday. The Nasdaq up 1.3%. Also the Dow up 1.3% today. That's what you are seeing here. The S&P 500 leading the gains up 1.4% on Friday, and the Russell 2000, which tracks small caps, that was up 0.9% for today. So good to see that bounce, and ultimately, at least for the day, positive reaction to the jobs report. Even though, as you mentioned, Ed, it was a pretty wild day. We saw a strong open, then gave those gains back, and then ended up with some decent gains by the end of the day. So we'll talk about the week, but first let's just talk today's action and what was driving what we saw.
Yeah, I mean, when we saw the jobs report, it showed mixed numbers. Non-farm payrolls were higher than expected, but unemployment rose more than expected, in part because the household survey, which is separate from the payrolls, that actually showed an employment drop. And that sometimes moves sooner than payrolls in terms of when the economy turns. So that was back and forth. We also had some more buzz that China would back off on the COVID policy, so that lifted China stocks, oil, lifted commodities. So there were some positive factors, but boy, it went up and down. It rose up, it came down, came up, it came down, came up again. Partly, there's other various factors, and other things were even more volatile. Those were positive factors. On the downside, mega cap stocks looking weak, and we'll look at those more. I mean, obviously, but those really suffered. It's one reason why the Nasdaq has struggled in the week, and cloud stocks were really weak. So that's been an issue for for the Nasdaq. One thing is that the Treasury yield.
Yeah, we'll go there. So I just
We'll
I
go
just
there
wanted
later.
to I just wanted to show the S&P as well.
Yeah, the S&P
briefly
came back
before we
up,
moved on.
got up to about the 21-day line. Still needs to get above the 50-day line. I think that would be really nice to see. But it was nice to see a bounce. We got over some areas.
But you mentioned the 10-year Treasury yield, so let's go there as your TNX.
Yeah, so that rebounded late in the week. And one thing out there, perhaps the bond market wasn't as negative as this would look, because it did bounce today, and it bounced for the week. But today, while the 10-year rose, the 2-year yield, which is more closely linked to Fed policy, that fell a little bit. And the odds shifted a little bit back toward a 50 basis point hike in December, as opposed to yet another 75 basis point. I mean, it would just take one little data point to get that, or one little comment from a Fed official to set that swinging back and forth. But that's probably one reason why we ended up higher, is that on that end. But so while Friday was strong, there was a lot of damage for the week. I mean, we came in, there was some strength, and it was also disappointing how it turned out. Like, we had rallied last week, and then, so we come up above the 50-day line, then we're holding that area. And then on Wednesday, bam, it comes down on the Fed. Or you're going to get slower rates, but we're just going to raise them higher and higher. So it wasn't exactly, it was like, we're giving you what you want, but it's not what the market really wanted.
Right.
Really selling off. And it just did not take that well. The S&P coming through there, the Dow, which doesn't look as bad, through the 200-day line, that's okay. I mean, it's just isn't great to see.
But resistance where you might expect.
Where you might expect it. It hasn't been falling apart. It's where you expect it. Now the question, can it hold up and move higher? So not super negative, but negative when you put it together with that. The Russell also fell through the 50-day line. It may have recovered by today to get back above it. Yeah, it got back above, so that's positive, but still a weakness. But the Nasdaq is where, again, the weakness is really centered.
Yeah. With the undercut of the follow-through day low. So that was a notable occurrence this week.
Yeah, and that's a really bad sign. When that happens, there's often, like Eric Kroll, who was on IBD Live, points out that usually often means a 90% chance that the rally will fail. Now, the Nasdaq's the laggard here, and the S&P and the Dow and the Russell haven't done that. So it may not be that dire, but it's not a positive sign. And, it's also just when all these tech sectors are not going well, that's really hard to see that. You're fighting the Fed, you're fighting so much of the big techs. It's just hard to ask the rally to make a kind of a move. It's one thing for Apple to not go anywhere, or
Right.
for software to sort of like lag, but to be just such big drops. It's actually sort of surprising that the market held up as well as it did in many ways.
Mm-hmm. Yeah, so we'll have to see. We're still at this critical juncture here. So, I know we'll talk about the battle plan for next week. The news doesn't stop.
No.
There's still more that could impact the market. So we'll get to that. But first, let's look at a couple of ETFs of interest. We looked at the 10-year Treasury yield, also the dollar down today. So maybe easing the kind of pressure there on the broad market, at least for today. And then among sectors, XLE, strong week. Let's see, for the week up about 2.4%, third weekly gain in a row, and now up 5 out of the last 6 weeks from those short-term lows. And then we also have XME, the metals and mining ETF, an upside reversal here, up 2% for the week, third weekly gain in a row, still trying to recover here. We have SMH, chip stocks closing down, off lows, but still down for the week by about 0.8%. IGV, the tech software ETF, really taking a hard hit here this week, down 10.5%, Ed. That is not good. And more specifically with cloud software stocks, that's really where we're seeing a lot of the pain right now, down about 11.5% this week on the heels of some disappointing earnings reactions in that group.
Yeah, and that's what I was just reiterating, just when you see those, like some of the weakness in some of these areas, chips don't look terrible, but they're not really going anywhere. It's part of the reason they hadn't fallen is that they've had so many warnings already. I mean, that isn't there. But there's very few that are doing well. So the chips
Right.
really aren't, they're way out there. Software is in meltdown mode. Big techs are in meltdown mode. That's just hard to make a lot of headway, even when there are some sectors that are doing well.
Mm-hmm. Well, speaking of sectors that are doing well, or at least stocks that are doing well, Albemarle with an upside reversal this week, closing up 1.8% in some strong volume. We also had an RS line blue dot on this weekly chart here, and it looks like it closed pretty strongly as well, right on the verge of a trend line from the highs in this space, and a pretty impressive close in Thursday's session and continuing higher Friday, Ed.
Yeah, and so this one had wild action. This is also to tell you how the market is. On Wednesday, it sold off through the 50-day line because its rival Livent had somewhat mixed results, like strong growth, but sales were a little light. Thursday, and also, of course, the market was melting down that day.
Yeah.
Thursday, Albemarle had reported really strong growth. I mean, you look at those numbers; they're just amazing numbers. But it sold off because after raising guidance a bunch of times, it didn't raise guidance. It actually narrowed the range. So it lowered the top end. It also raised the bottom end. So the midpoints didn't really change, but that was enough. But then you also have to wait a second. It's like, this is massive growth and that PE ratio is pretty low. And it's supposed to be strong growth through next year. That is, you don't usually see a combination of 614% growth with that kind of PE. Obviously, it's not the greatest market, but so those are some things. So big shakeout. It also tells you why, when the market's shaky and stock hasn't quite moved out, you probably should wait. There's sometimes the worst time to buy a stock is when it's almost breaking out, or almost, because there's still that risk something happens, because that really fell hard. I mean, this is volatile. This is not a tame stock, even in the best of times. So there's that. But now it's setting up. Now it's coming up. Strong volume the last couple of days. So we'll see. But it seems to be on the cusp of that trend line, or just the short-term high from a couple of days ago.
Exactly. Yep. Keeping tabs on that one. And let's also take a look at Apple, a mega cap stock that was a mega loser this week, down over 11%. And last week had a very strong reaction to its earnings report, leaving many investors on our team to wonder maybe too strong of a reaction. And a couple of our team members taking advantage of that with some shorts. So shorting Apple heading into this week. So kudos to those on our team who did short this one because, yeah, Apple down over 11% for the week. Your thoughts, Ed?
Yeah, and I was not one of those, unfortunately.
Me
But
either.
yeah, I mean, it was kind of came up to resistance, and you didn't know how it was going to go. And yeah, the report wasn't that great, and the guidance wasn't that great, so it was sort of surprising how well it did on Friday. And this really melted down, and there's just that kind of weakness throughout the mega caps. Some of which already had terrible weeks last week, but there's a lot of 10% losers, and that's really a big drop. And honestly, yeah, there's still a reaction to earnings and stuff, but there really wasn't any other news on Apple that I can think of. It just sold off hard for much of the week. It almost undercut the October lows. It's still got a little distance to the June lows, but really bearish. Just really hard to run this. This is why the Nasdaq and along with other ones had such a bad week.
Right. And when it comes to shorting, we've talked about this a lot in detail on IBD Live, but the time to do it is when you do see a rally into a resistance level. Often it's maybe not a strong move on earnings and volume into a resistance level.
Yeah.
Maybe it's a low volume rally into resistance, but Apple perhaps a little bit of a unique case. But now isn't the time to short after you've seen stock come off 11% in 1 week.
Yeah, even if this is headed lower, you could easily imagine this one having a rally up to 150. Like just say and then falling back down. Even though I'm not making any predictions of where this goes, but that's the problem when it's fallen 11% this week. I mean, it could easily bounce. So yeah, what you pointed out, that's the time to do it.
Okay, and let's also take a look at Twilio because as you were discussing earlier, Ed, cloud software stocks really taking a brutal beating this week. I mean, we can't even see Twilio's highs on this chart anymore. That's how bad it's been. But we can change the price scale to best. That doesn't even help. I got to zoom out for us to really, there we go, to really see where it peaked, like many highly valued growth stocks in February of 2021 before the market itself peaked back in late 2021. But goodness, I mean, talk about kicking a stock while it's already down. We have Twilio here, 86% off of its highs and down just 43% this week alone with a huge earnings disappointment.
Yeah, I think it actually beat views. It was the guidance that was terrible, and it just seems everybody wants nothing to do with these names at this point. It's losing money. That's not going to change for a little while, and
we're well below the COVID lows at this point.
Well below, yeah, and that's you can always fall more because like, oh look, it had fallen all the way. It had already fallen to like below 80 from over 400. Well, now it's lost basically half of that in the last week or so. You can always fall more, and it's just I'm not sure what it is. I think there was a lot of other software names that had bad earnings reactions. I think there's a concern now that executives who weren't cutting software spending are now going to. And so the worry is that, with the economy slowing, that all these corporations freezing hiring, that you're really going to see IT spending get cut. A lot of budgets are being set, and I guess they're probably not being set very high. And so I think that's one reason why you're seeing these outside losses. But in any case, this is a damaged sector, and it may have implications for other companies, anything to do with the cloud. It's probably not a coincidence that you're seeing Apple and Facebook and Google and Microsoft with all the woes they're having, that you're also seeing it in these cloud software names.
Yeah, that definitely makes sense. Okay, Ed, so it seems like tech bad, commodities and medicals good. I mean, where should we be focusing our efforts for watch list ideas?
Well, there are actually a lot of sectors that are doing well. I mean, you talked about healthcare. There's a lot of commodities, of various commodities, especially in the energy sector. There's other things, there's, still some discount retailers, there's some restaurants. So there's actually a lot of sectors that are showing some interesting stuff. But, when the market is this volatile, when the market isn't sort of heading lower, it's like being, having that relative strength won't really necessarily do you a lot of good. I mean, it's going to be, the risks are that it comes down. We need some of these, we need the tech names to at least calm down, to settle off. We probably need the Fed to start really substantially easing off, to start feeling that we're going to have a really strong uptrend. We will have the CPI report on Thursday. So those are places where you should look. Yeah, and so that could sink the rally, or you could once again have that opportunity. But are we going to have some positive news? I don't know. But these are areas where you should be looking. You should build your watch list, but probably shouldn't be acting until we see some strength. Eric Kroll talked about the NASDAQ getting above the 50-day line. That'll take a lot of work. The S&P, not as much work, but would be almost like just an early step. It's not like it wouldn't be getting, wouldn't be in the free and clear. So, just the risk reward is like, probably should be eschewing new buys until you really see some market strength, and you're probably going to need some good news for that to happen.
All right. Well, yeah, there's some bright spots here and there. Maybe, some things that are working, but definitely feels like more of a stock pickers market in that regard, as we've been saying in all of 2022. So that theme continues, and we'll see what next week brings. All right, Ed, thanks so much for your analysis today, and thanks everyone for tuning in. Coming up at 5 p.m. Eastern on my YouTube channel, I'll have options trader Angie Gaskell. You may know her on Twitter at MomAngTrades. So it'll be great to get her thoughts on current market conditions, and also pick her brain about a couple of option trades that she's made lately. And that, again, is happening at 5 p.m. Eastern on my YouTube channel. And the link to that is on my Twitter feed at Alissa Coram. So I'll see you there. Hope you have a great weekend, Ed. And we'll see everyone back here next week.